Ladies and gentlemen, good day and welcome to the Q3FY25 earnings conference call of Mold-Tek Packaging Limited, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Gupta from Emkay Global Financial Services. Thank you, and over to you, Mr. Gupta.
Thanks, Michelle. Good evening, everyone. I would like to welcome management and thank them for this opportunity. We have with us today J. Lakshman Rao, Chairman and Managing Director. I shall now hand over the call to him for his opening remarks. Over to you, sir.
Good evening, everybody. Thank you very much for your interest in our quarterly and 9 months results. I'm glad to inform you that there is a considerable improvement in the performance this quarter compared to the previous 2 quarters. The sales are up by 15%. In volume terms, it's up by 7.5%, and rupee terms, it's up by 15.25%. EBITDA also gone up by almost 12%. But due to higher depreciation and interest, the PAT has dipped by 3.9% compared to Q3 last year. So the one significant improvement what we are going to see in future is our entry into pharma is well consolidating. We are in position not only to add several new products and several new clients, but commercial supplies to some of them started as late in December, and it's picking up pace in this quarter, that is Q4. For example, our sales were hardly 1.5 crores in pharma compared to 2.27 crores in pharma against 1 crore in Q2. But in the month of January itself, we have crossed 2.1 crores due to the commercialization of the samples that were approved during the last several months. So within a year, less than a year, company could come to a considerable capacity utilization of pharma facilities. Currently at 2 crores, it is almost occupying 40% of the capacity. And steps have been taken to enhance the pharma capacities also. During the question and answers, we can have more detailed discussion. So I over to the moderator to start the question and answer session.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gaurav from Capital Farming Consultants. Please go ahead.
Yeah, thanks for giving an opportunity. I hope I am audible.
Sir, I request you to use your handset. It's a little bit muffled.
Okay. I hope now it is better.
Yes, sir.
So my first question is some of the clarifications vis-a-vis the last quarter when we were conducting this conference call. We mentioned a couple of challenges from supply side within Mold-Tek. That was like, for example, printing machines were not available, which impacted our, I think, paint packs supply. Then certain molds were not also available, which impacted our pharma confirmed orders, right? And same way in food and FMCG segment, we were expecting that the supplies will start from majorly January onwards, right? So in all these 3 segments, either availability of machine or molds or supplies from plant in January, if all of them have started or some of them are still facing challenges?
Yeah, that's good that you're following it up very closely. Yes, one of the challenges we have been facing for last several months is the printing capacity of IML and procuring the IML in time, which is impacting our supplies in food and FMCG sector and also to some extent in the paint and loops. So these printing machines have just arrived. A couple of them, one from Italy and one from Delhi. Both the machines are in transit. Actually, the Italian machine landed in India, and in this week it will be reaching our plant. So as we anticipated end of January, but they are reaching by say 10th of Feb, and probably the erection will take another couple of weeks. So certainly by end of February, we are ready to have almost 35 to 40% increase in the capacity of IML print labels, which will also die cutting, so which will enable us to face the upcoming season, which generally starts middle of February and goes up till July, June ending. So these next 4 or 5 months is crucial, and thankfully we are ready with the enhanced capacities. Coming to the pharma, the molds which have been developed for pharma are all approved, and I'm glad to inform you that we are not even 1 year old in pharma, because the plant was inaugurated only in February last year. And within 1 year, I'm glad to say that we have developed 12 new bottle SKUs and 2 more child-resistant featured products for pharma industry in India. And I'm also glad to inform you that recently in the month of December, we have taken up a challenging project for one of our Hyderabad-based company exporting to US, a product which is been applied for patent, and that product supplies also started at the trial batches of about 2 lakh pieces worth around 25-30 lakhs rupees per month, but with a potential that can more than triple in the next financial year. So that product we are applying for the patent because there is a lot of IP and design concepts have been incorporated in it, and well appreciated by the client for quick development within 5 weeks. So that product showcases our ability to develop new packaging solutions in the pharma industry, which has been highlighted in our course of audits by various other companies also. So these molds are now ready, and supplies also have started, and we are gearing up additional capacities in pharma within the premises what can it accommodate in the next 3 to 4 months. And for the new premises, construction also has been initiated, which will be probably starting from next calendar year.
That's great. That's great. So coming to the presentation that we have uploaded for 9 months, this quarter result also. So overall volume, we have mentioned that there is an increase of almost 7.29% from 26,590 metric ton to 28,530 metric ton. So if you can give in this 9 months volume, what exactly is the volume of paint packs vis-a-vis last year 9 months?
Yeah, the paint packs volume has grown up by almost 14% this year, thanks to Aditya Birla Group starting commercial production at Cheyyar and Panipat, and recently at Mahad. So paint is up by 14% in 9 months to 9 months numbers in terms of value. But in terms of quantum, that is in tonnage, 8.4% is the growth in paint, 7.3% in food and FMCG, 18% in Q-Pack, that is a square pack. Pharma, of course, is contributing minus small numbers, and then rest is loops, is down by around 1.5%. So overall growth is around 7.4%, 7.31% in tonnage.
And that's it. Would you be able to give the absolute number of the paint segment in metric tons? This year 9 months?
For the 9 months, it is 13,733 tons, which is 48% of our overall volume.
Last year
for 9 months. Loops is 24%, food and FMCG is 12.7%, Q-Pack is 14.6%, and pharma is 0.35%.
Sir, I'm asking last year 9 months volume of paint pack.
Last year 9 months volumes, do you have them? Yeah. Last year, okay. Last year it was 12,670 paints, 7,006 in loops, 3,368 in food and FMCG, 3,546 in Q-Pack, and pharma 0.
So sir, considering the 9 months volume of paint segment last year vis-a-vis this year, and considering that we have grown substantially, considering the supplies that we have made to the Aditya Birla, right? So if we exclude the Aditya Birla number, I'm assuming that it will be somewhere around 1,500 metric ton or 2,000 metric ton in 9 months volume. So there seems to be degrowth in the paint packs on a 9-month basis, right? If my understanding is correct.
If you remove ABG, it is a negative in other paint segment. ABG alone has contributed around
Asian Paints, or some other players have also contributed the degrowth?
Major reduction is from Asian Paints because they are one of our largest customers even today. So there we lost almost 10% volume. And others like Narrowlac and Wedges is not much of a downfall. It may be 4 to 5%. But the major reduction is from Asian Paints.
Would you be able to elaborate what are the reasons why such kind of a degrowth, almost 10% in our volume share with the Asian Paints is there?
One of the reasons is I think they also have tepid growth. One, I don't have the exact numbers, but there is a tepid growth in their volumes. And there is also the redistribution of volumes between the vendors based on pricing. We are little sticky on our pricing. Probably that is one of the reasons why we are losing some part of the business.
Okay. Sir, last question from my side, if you may allow. In one of the last con call also, you mentioned the same challenge, that redistribution of the volume by Asian Paint to some of the other suppliers also, and one of the supplier is their related party also, right? You mentioned in the con call. Since we are backing up on the Aditya Birla group, specifically this Birla Opus, in a big way, we have spent a lot of money in the capex, right? So do you foresee the same kind of a challenge going forward, that in their scenario also there might be some related party to whom this volume distribution can happen, and our entire capex that we have done over a period of a time
no, see,
that kind of a ROI?
See, we are neither related to Asian Paints nor ABG. We are just a professional company doing our best services, and our quality is what giving us the opportunity to serve these kind of giant companies. Having said that, ABG has all the suppliers other than Hi-Tech. Rest of all paint manufacturers you name in country are associated with ABG one way or other. So that is not the reason. Like our association with ABG won't make Asian Paints to reduce our volumes. Definitely, I don't think so. It is maybe redistribution or pricing that could be the reason, is what I guess. Because Jolly or Hi-Tech, other than Hi-Tech, you name all the players in the paint segment, they're all working for ABG. So that's a common feature.
No, sir, my question was slightly different. Let me rephrase it. Like, because that there is a related party which also supplies to Asian Paints, and based on, because it is also a listed entity as far as I recollect, and the numbers that they have reported, they have taken a substantial chunk of volume as well as value-wise from Asian Paints, right? And since we have invested for Aditya Birla Group also a lot of money in terms of capex, so do we foresee that a certain related party of ABG Group in maybe in near term can also get into, if not already in this vertical, maybe get into this vertical, and then our supplies might be curtailed somewhere down the line, 2-3 years?
Oh, you mean think that Aditya Birla might start on their own into plastic?
Some of their related party group company, do you foresee that challenge?
No, I don't foresee that, because there was no such talk or even a inkling of mentioning such plans in Asia.
As per your industry knowledge, sir, if Aditya Birla Group is having any such company which is also in this paint manufacturing segment, or not at all? Because you know the industry very well as compared to us.
As of today, because we certainly have information about that, as of today there is no entry of Aditya Birla Group directly or indirectly in any of the plastic molding lines.
That's great. That's all from my side. I will come back in queue. Thanks a lot.
Yeah.
Thank you. The next question is from the line of Sunny Vishe from Axis Securities. Please go ahead.
Yeah, thanks for taking my question, sir. So I'm trying to understand EBITDA per kg trajectory. If I could remember correctly, we were expecting to cross the EBITDA per kg of rupees 38 by the year end. But as of now, it seems to be somewhere around 36.7. What are our expectations for the full year, and when do we see us crossing the earlier target of rupees 40 per kg?
Yeah, probably in the Q4 we may see the number crossing 38 as the pharma contributions are substantially improving compared to the previous quarters. But for it to cross a level like 40, maybe only in the next financial year we can aim at it, because pharma will be in big numbers compared to what it is in this current financial year. From 2.5 crores what we did in the first 2 quarters put together, pharma probably would do another 5.5 to 6 crores in the Q4. That takes the overall total to about 8 crores for the year. So from 8, we are aiming at almost 35 crores turnover coming from pharma in the next financial year. So that substantial improvement of high margin business should enable us to move above the or at least close to the 40 mark next financial year.
Okay. And one small question. So this quarter we increased the volumes by 7.5%, but the revenue was higher by 15%. So there is clear improvement in the realization per kg. So is this the current level is more or less that we will be able to hold, or do you think it is improving further in the coming quarters?
Yeah, there is an improvement due to 2 reasons. One is raw material price also has gone up marginally. It's not really gone up. It is, if you take 9 months, it's gone up by around 4 rupees. So the selling price could go up by around 8 rupees. So that is why we are able to sustain the EBITDA improvement, which is almost 11.9% for the quarter and 6% for the overall 9 months, in spite of increase in staff costs and labor costs due to the new plants that have been installed and commissioned in this year. All the capitalization benefit, not benefit I would say, capitalization of expenditure is now getting impacted in the P&L. So that way the underutilization of these new capacities is causing a challenge in increasing the EBITDA. But going forward with the ABG numbers improving and pharma numbers also improving from probably next quarter onwards, we would be able to see the EBITDA per kg improving.
So sir, I'm asking on realization per kg. So I think it will be a product of raw material prices and demand.
It is a product of raw material and also combination of the product mix. As we grow in pharma, per kg realization could be more than 300 to 350 rupees, whereas our current average is 206. So even if pharma becomes a 5% of our sale price, sale volume, it would be taking up our sale average price from 205, 206 today to 215 level. So that can substantially improve the pricing, hence margins also.
Understood.
Because of low volume as of today, it will not be able to pull it up right now. But as I said, the Q4 is promising. We are almost doing more than double than what we did in the first 9 months in this quarter. So that way, little improvement can come in Q4, but substantial improvement I'm sure will start showing from Q1 of next financial year.
Thanks a lot, sir. Thank you.
Thank you. The next question is from the line of Mayank Agarwal from Scientific Investing. Please go ahead.
Yeah, thank you for the opportunity. So I have a question on the margin pressure on the revenue book from the paint and the FMCG segment.
Okay, go ahead.
Yeah, so how much of the revenue book has like margin pressure, especially in the paint and the FMCG segment you are facing right now?
See, almost paint segment contributes to us even today 48% of volume, and lube is 24%. In terms of lube, we are reasonably all right because the product quality is very demanding in lube compared to paint. So the competition is not so severe in lubes. Hence, price pressure on loop packs is not so much. But in paints, being a very thick product and a lot of suppliers are already existing in the country, there is always a price pressure on paint industry, sales to paint industry. In food and FMCG, as we are progressively adding new products, for example, this year, one of our biggest catch is Surf Excel, which is now coming in. You might have seen in the markets that it is a 4-pack Surf Excel. I think it is each 1.5 kg or 1 kg. They are packing in our 10-liter square pack, and that's become a very big hit in the market. And their volumes are increasing, and the indications are whatever we sold this year might almost at least grow by 40-50% next year. So Surf Excel is a big catch, and we have been talking about Horlicks for the last 2 years. Now the clearance have come for Horlicks, and their numbers, what they indicated, are also very encouraging. So in food and FMCG going forward, better utilization, and the molds were made more than a year ago for Horlicks, and in the case of Surf Excel, the molds were added recently, and that product is also doing good. So going forward, even food and FMCG, we anticipate double-digit growth from 7.3% this year. It should be in the range of around 10 to 12%.
Okay, thank you. And on the new paint CapEx we have done, like will it work on the same margin or like the more or less? Like as
Which one? In paint or?
The new paint CapEx we have done.
See, in the paint industry, as of today, the EBITDA margins are below our overall company average. So, increasing the paint industry growth, only in the case of Aditya Birla Group and Asian Paints, where quality and IML being highly used, we have decent EBITDA margins. Other industries where we still use screen printing, there the EBITDA margins are not so encouraging. So that is one of the reasons we let go some of those opportunities and concentrate more on high value add like FMCG, food, and now pharma.
Okay, and can you give more light on like how you are doubling the capacity for the pharma segment?
See, in pharma segment, it always goes with starting with audit and then followed by stability tests and then machine trials and then batch tests. After that, commercial supplies would start. So I'm very glad that 12 of the reasonably big pharma players in India have already audited our premises in the last 10 months, and all of them cleared our premises for the next steps, that is stability, and even some of them completed trial lot supplies, and commercial quantities started from somewhere in end of December, and the reflection is shoot up of turnover in Jan, because some of the products have become commercial. Same trend, if it continues, we hope good numbers to happen in Q4 and even from Q1 onwards for next year. Another thing is 3 more products I have mentioned in the press release today. Squeeze lock CRC, 28 mm CRC. We are working on 2 more SKUs for another large MNC in India. These 4 or 5 products are in the anvil. The molds are in the final stage. Samples have been approved. Now line trials are going on. Maybe April onwards they will get into commercial production, shooting up our numbers in the Q1. So if things go well, pharma can be a star contributor in the next couple of quarters. But that's not the end. In fact, it is the beginning, because as you know, pharma packaging is a very huge market of more than 3,000-4,000 crores per annum. So what we are looking at is 30-40 crores next year is not even in 1%. So, and also added to that, we are very, I wouldn't say fortunate, we have been identified even by a US company to procure canisters from us. I have been talking about our products which are unique compared to our competitors in India, especially in the canister segment. We have single piece canister with laser marking on it, whereas others are still using paper label and double piece canisters. So these are what canister models which are used in USA. And in fact, right as we are talking today, one consignment of 1 million pieces of canisters are being exported to US directly. So that opportunity also opening up our ability to aim at US market directly instead of going through Indian pharma companies. So we are even exploring those opportunities. I wouldn't say that's very huge as of today, but going forward, these numbers also will be, this segment is another area which can add value to both in terms of revenue and profits to the company.
Okay, and if the last question, if I may ask, like, are we sticking to the old growth and the margin targets given?
Yeah, we thought of reaching better than this, but probably we may end up somewhere close to 8-9% this year, because what we thought in terms of ABG, we lost in Asian Paints, half of it at least. So that is what has caused difference in our numbers projected and what numbers we are achieving. But still, we'll be close to a higher single digit in this year, and definitely be in double digits next year.
Okay, thank you so much.
Thanks.
Thank you. We'll take the next question from the line of Richa from Equity Master. Please go ahead.
So thank you for the opportunity. Sir, it seems that the pharma is shaping up well, and you had planned some kind of capacity expansions. If you could give some kind of capex target for FY25, for FY26, it would help. And also, with the current capacities, is the depreciation and interest cost the same run rate can be considered with whatever capex was planned for FY25?
Yeah, because we have depreciated almost we're going to depreciate, I'd say, almost 50 crores in this current financial year. So far, already 36 crores has been depreciated. Probably another 12-13 crores would go off. So next year, probably it will inch up a bit, but the new addition of plant and machinery, I don't think will be to the tune of 130 crores, which we have been investing in the last 3 financial years. Because the next year plan is only to augment pharma capacities, which may not be like 60 crores what we did in phase 1. It may be to the tune of 30 to 35 crores, but that is enough to double the capacity because the land and building is already in place. So only for additional machines and molds, the investment will be definitely less compared to greenfield project what we invested last year. So additional 25 to 30 crores investment will certainly happen in pharma going forward, but that won't be still enough. Maybe we may have to go for expanding, adding new buildings in the Sultanpur premises by spending another 8 to 10 crores. So that addition, if we take it, that's not been decided, but looking at the trend, what is happening, we may have to start that immediately to catch up with the growing demand for our products. So if that too happens, probably investment in pharma can reach up to 40 crores. So 25 to 40 crores is investment we are planning for pharma next financial year. And the rest of the investments are only balancing in nature. In either at Cheyyar or Panipat or Mahad, we already made substantial investments. Mahad may have some investment of 10-15 crores, but rest of the plants, it is only balancing equipment. So I am thinking, or at least on the paper, what it looks like, our investment next year may come down substantially from 120 crores for the last 3 years, including this year, to around 60-65 crores for the next financial year.
Okay. And so my next question is on the food and FMCG segment. It seems like, this used to be a key driver with more than 15% growth and almost 20% kind of growth used to be the guidance. And I think you mentioned some, in response to some question of 10 to 12% kind of growth, which seems quite low, and, it will be difficult to push the volume growth at an overall company level given what's happening at the paint segment and the glue segment. So could you just could you just elaborate on what's happening? Has the competition increased, or have you acquired new customers? Is this the best that we can expect, 10 to 12% in food and FMCG?
Yeah, I answered this last quarter also. Yes, there is an increased competition, especially in the nooks and corners of the country. Small players with a couple of machines and a few product range they are entering, especially in ice creams and dairy products where there's a need everywhere. So that is one certainly a reason. But our confidence for better growth next year is because our plant at Panipat will start manufacturing thin wall products or food products from April or max May this year. So that will start contributing. And another confidence is good numbers of these Horlicks and Surf Excel products which we are going to manufacture already, for which the orders and molds are ready and supplies have started in the case of Surf Excel. And other products might start sometime in the next couple of months. So that is why I'm confident next year thin wall sales also can be in double digits. Yes, I agree with you, like in the paint industry, probably the trend may not be so sharp in terms of using orders from existing paint companies, because they are also shifting into IML. The good news is last few months IML sales, shifting to IML is improving in the paint industry. That makes Mold-Tek as a better choice for players like Asian Paints or even KNP and Wedger because of the robotic capacities what we have, our in-house IML capacities, and our ability to develop new designs and challenging artworks. So that makes Mold-Tek obviously a better option. So we anticipate at least, if not a growth in the other paint companies, we may not lose our share in the next financial year is our strong belief. If that happens, ABG will continue to grow because they have expansion plans and they are indicating big numbers to happen in the next financial year. If they are partially true or at least reasonably true, we may see a reasonable 10%, double-digit growth in paint segment as well. If that happens, our prediction to cross 10-11% growth next financial year shouldn't be a problem. But I keep my fingers crossed on that.
Okay. And sir, you mentioned your capacity is 50 plus, but if you could give the exact capacity and utilization expected this year, that would help.
Capacity utilization is still around 70% overall company level, but the plants at Cheyyar and Mahad, especially Panipat, which have been created in anticipation of ABG's growth, there the percentages are still 60% compared to the initial capacity, but we have been adding machines there in anticipation of their growth next year. So if you consider that also, it is below 50% utilization. So once that start moving up to 60 or 70%, we will be seeing the overheads distributed over larger output and the margins.
Okay, but what is the base capacity, sir? What is the base capacity? I know
the base capacity is more than 53,000 tons as of today per annum, and this year we may hit close to 40,000. We are already at 28,500. So probably we'll be hitting somewhere close to 39,000.
Okay. Thank you and all the best.
Thank you. The next question is from the line of Ashutosh Khetan from Asian Market Securities. Please go ahead.
Yeah, hi sir. I wanted to ask the contribution of IML in value and volume terms for this quarter, and in terms of value, paints, lubes, FMCG and pharma contribution.
Yeah. In terms of IML, the numbers are going up because the paint industry also started adopting IML in a reasonable way, and of course HTL is also part of it. So overall labeled containers have grown up from 64% last Q3 to 73.4%. Overall for 9 months is also substantial, 63.6 to 69.3. So almost 10% improvement in the labeled containers compared to last year. There is an improvement. And coming to volumes, I think I already mentioned to you, paints contribute in this Q3 45.5%, lubes 22.2%, food is 18.4%, Q-Pack is 12.7%. So put together, food and Q-Pack is almost now crossed 31%. Pharma is 1.19% in terms of percentage in the turnover side. In the volume side, paint is still 48%, lube is 24.6%, food and FMCG is only 12.4%, Q-Pack is 14.4%, pharma is 0.6%.
Okay, sir. And what will be the volume guidance for FY25?
FY25, we thought we will be in the region of 10 to 15%, but probably it looks like we might end up close to 8 to 9% growth overall in this year, concluding in March. But coming to next year, we are confident we will be in double digits because what I explained to the previous question.
Okay, sir. And lastly, on the pharma, what will be the revenue potential for 27?
Yeah, ideally we wish to see a triple digit coming over there, but that may be too ambitious. But it is possible, it's not impossible, because the way pharma market behaves is their approval system, their trial system is pretty long. Sometimes it takes almost 1 year to get into real commercial supplies. And that phase is being completed for almost 10 to 12 clients, and they are in the process of giving us trial orders, some of them giving commercial orders. That is why there is a shot up in the performance in January. So if that accumulation starts from, let's say, next year, the numbers can double at least, if not triple. So if we achieve 30-35 crores in next financial year in pharma, we can aim at 60 to 65 crores for the following year. That is 26-27.
Got it, sir. Thank you.
Thank you. We'll take the next question from the line of Roshni Galani from ICICI Prudential AMC. Please go ahead.
One thing, thanks for the opportunity. One thing I wanted to ask was with respect to the capacity addition that we are doing in Panipat for FMCG. Do we have active commitments from our clients because we've already lost some market share there?
Yeah, actually, some of the products will go to Baddi, Hindustan Lever's Baddi. There is orders which we are sending all the way from Hyderabad. So part of this can be moved there, part of the molds can move there. Even Horlicks is also filled in the north. A part of that can start there. And a big market of square pack is open for us because, as you know, we have the patent and able to push the patent right in the Delhi High Court and several other high courts. So the square pack demand is still improving there in the north, and those will be met through Panipat plant. So coming to the regular ice creams and dairy products, we certainly have our own sway in terms of our quality and consistency, and especially when volumes are involved, we are the most reliable supplier for anybody. So we certainly feel that starting in north will give us a better momentum in food and FMCG growth.
Okay, thanks.
Thank you. The next question is from the line of Jaiveer Shekhawat from Ambit Capital. Please go ahead.
Sure, thanks a lot. So first question, if I track your guidance on volumes over the last couple of quarters, I mean, this year we were expecting to possibly end the year at low teens, and the guidance for the next year was possibly somewhere around mid to high teens. But I think over the last few quarters, we have seen that there has been consistent decline in the overall volume growth guidance. So are there any structural challenges that we are facing because of which now, even for FY26, last quarter you were talking about possibly mid to high teens, and now you are possibly down to double-digit growth. So any structural challenges that we are facing, or do you think you'll be able to get back to about mid-teens growth next year in terms of volumes?
See, to be very fair and clear, answer to you, we never anticipated a drop in Asian Paints volumes in this year. So that growth, they contribute almost 33% of our sales even today, 30%. So a big 10% drop in their volume is hit us by almost 3 percentage points. So that is one of the reasons why we have not reached the projected volume growth in the current financial year. And ABG numbers were picked up well in the first 6-7 months, but they're a little tepid now. But of course, for any brand to sustain and grow, it will take some time. And we are bullish on that because their commentary and their indication to us is good numbers growth coming in the right from Q1 onwards. So our two things majorly, one of them is our misplanning in printing capacity or a rejection of a printing machine in a vital time has made us lose some part of business both in QPACs and thin wall. That is one reason. And second reason I state is Asian Paints loss of business. These two are the major reasons why we couldn't reach at least close to 12 to 15% bracket, which I thought we would definitely meet. These are the two reasons, frankly, I should admit. Having said that, with the addition of print capacities in February, which is starting of the season, and that capacity is also substantial. It's not like 10-15%. We added almost 40% extra capacity now, which will smoothen our supply situation in IML labels and won't disrupt any supplies to clients with whom we have to say no in the last season. So I hope that is one big correction we have taken. And I would like to be cautious this time because we don't know how things will happen in the paint segment going forward. So keeping that in mind, I'm talking of lower growth. But internally, we are still aiming at least 15% growth for next financial year. But I'll be glad even if it is more than 10%, mainly fueled by pharma. If it is fueled by pharma, that will be much better satisfaction and in terms of revenue and profitability also.
Sure. So since you've already mentioned you're targeting anywhere between 30-40 crores next year in terms of revenues in pharma, so that contribution would possibly still be sub 5% of your overall revenues. So I think majority of the heavy lifting will still have to be done by your existing segments. So when you say that 10 to 15% volume growth, how do you see the volume growth across different segments?
See, as I said, I'm not very confident about the paints. As far as the ABG is concerned, I'm confident the numbers will definitely go up because the indication given to us is they're talking about 40-50% increase in our pickup. If not, there's overall demand from pickup from our plants, they indicated. So that will be a substantial improvement for us if that happens. But Asian Paints, we are not very sure how their plans of procurement are going to be. But definitely, we will never lose beyond, if we lose 5, 6% or 10%, or probably we may get same level of demand from them next year because they are moving more and more into IML. Currently, more than 10 packs are shifted to IML, and where we are standing to gain in terms of volume business. So hopefully we may stabilize with Asian Paints this year, and ABG might add decent number to pull us up into double-digit growth in paint segment as well. But loops will never be such a player. Loops will be hardly 2-3% either side. So as you correctly said, the growth has to come from paint, food and FMCG and QPAC. In QPAC, we are confident because Surf Excel and a couple of other opportunities we got, which are going to be in big numbers. And we have also expanded the product range, added 2 liter and 3 liter pack in square, and molds are ready and samples are being tested by few big clients. So those numbers might start adding, and Horlicks numbers will certainly add next year. And Panipat, so I'm positive about a double-digit growth in food and FMCG. Only one area where we may not see double-digit is loops. So if other product lines can pull it up, we will be definitely in a decent growth next year.
And so in case of thin packs, over there as well, given your commissioning capacities both in North and West, I mean, what is your expectation for your high margin thin packs overall volume growth?
We should be close to 15% in the thin packs next year.
And so what's really driving that? Because we have actually not grown much this year, possibly in low single digits. So what's driving your confidence for a 15% growth next year?
No, this year, our tonnage wise, it is 7.3% for the first 9 months. And hopefully we'll close this year by around 8%, 8 or 8.5% in thin wall. So that is improvement in the last quarter and this fourth quarter because of, as I said, Horlicks and Kisan Jam started. And those numbers will shoot up in the next Q1 onwards. So I'm confident of a double-digit growth, or maybe I would say 10% for sure. It can also be 15% if our north plans go as per our plans, if things go as per our plans. Coming to QPack, I'm confident it will be again a 18-20% kind of growth next year. So that is one number which will pick up the lube or loss of lube, because in terms of value addition also, lube and square packs are almost similar. So that way, QPack growth might take care of lube. So all depends upon how we fare with Asian Paints next year. If our numbers at least stay where they are this year, we can aim at definitely a double digit and a decent better numbers, which we'll see only next year.
Sure. So last question. If I see your other expenses, YOY these have increased by around 30%, while your volumes have only grown by 7%. So could you highlight what's leading to this substantial increase in other expenses?
What do you mean by other expenses? What are all the items in that you have taken?
So as you disclose in your BSE filing itself, the line item other expenses just below depreciation and amortization expenses. So this other expenses are about 37 crores this quarter, as compared to about 28 crores in the quarter last year.
Yeah, a couple of reasons. One is to sustain our patent rights. We have been filing cases and spending on legal expenditure. That is one reason. And legal expenditure is more than 1 crore, where we press the various courts to get the injunctions and close the operations of 3 or 4 competitors who have copied our square pack. So 96 lakhs to be precise in the first 9 months. So that is one reason for expenditure increase. And general expenditure that include travel and trade fairs. We are now participating in trade fair in Chicago. We have participated in sent a team to Europe for our CPHI, that is pharma exhibition and shows. So we are now participating in all the pharma shows across the country. So these are the other reasons for increased other expenses.
Sure. Thanks a lot, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Manan Madlani from Kamaya Kya Wealth Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So, assuming the next year Asian Paint volume grows back to normal level, do you see any problem regarding the offtake from the Asian Paint? Like, will there be any switch from our company to that related party companies or anything like that?
No, I don't want to comment like this. Actually, it's not that our volumes are going to their related party. I'm not saying that. It is our maybe pricing inability or some other advantages what they foresee in other suppliers is causing a loss in our volumes for the last couple of years. But going forward, I don't think it would happen further, because as I said, IML adoption is improving in Asian Paints. Earlier it used to be almost nil. Is now currently at least 10 to 15% of their volumes what they're picking up from us is in IML. And going forward, if those numbers increase, of course others also will follow suit and develop their IML capabilities. But we being at the leaders in IML and able to work on challenging artworks and challenging label technologies, we may stand to gain. That is what positive we see in Asian Paints going forward. So how they decide the market share and dividing their share is definitely based on competitive pricing and their commitments. In both commitments, they are always stable with us, and the variation in the business distribution also won't become zero. It will become, let's say, it's between 15 to 25%. If your pricing is competitive, I may get my 25%. If my pricing is not so competitive, I may get 20. I'm very costly, they may get still 15%. So that way they are very fair in business allocation. And some reasons can still be there why we may be losing, but I think pricing or our costs of manufacturing being little on the higher side because of our R&D efforts, our design team, our robotics costs. We are little expensive than other players. Maybe that is one reason why we also internally should agree why we are losing a part of our business.
Okay. And in terms of Grasim, what kind of commitment they have given for next year?
It's not a commitment. Their volume growth, they are projecting 40 to 50% compared to this current financial year. And we are ready with this machinery and molds. We are almost ready. Most of the machines have arrived. A couple of them are in transit. By Feb end or March end, we will be ready with that volume. If their volumes start picking up really what they are predicting, we will be benefiting considerably.
And for Grasim, how much of the total volume is IML?
About 20%. About 15 to 20%.
So it's twice what Asian Paint is getting.
Asian Paint today also, I don't think it is above 10%. I don't have correct numbers, but I guess it should be around 10.
Okay. And one last question on the pharma side. So do you see in next 3 to 5 years, getting market share of somewhere around 5 to 10%? Do you foresee that kind of ambition or hike?
Yes, we are definitely nurturing such ambition because what I am really excited about is in the pharma industry, new product development is a long process. Most of I don't want to comment about the competitors because they're well established and doing a pretty good job themselves. But coming to the new product development, we can cut corners really fast because of our in-house tool room and our big design team. Developing a new concept, for example, the dual chamber product what we developed for one of big pharma company in Hyderabad, it is really a challenging task. Within 4 weeks, we developed 2 sets of molds, and those 2 components have to be assembled together to make a single piece, which will serve the dual purpose of low volume air inside and big handling, ease of bigger size for handling. So that challenge we have solved with our own internal design, for which we have now filed a patent. That shows within a year, less than a year's time, Mold-Tek is not only establishing the confidence, gaining the confidence of more than 10, 12 pharma companies, are able to file a patent application. And that is where I see in pharma we can make a big change. Because anybody who want to develop a new product, they will look at Mold-Tek now. Already second client who has been very happy with one fast development has already given us 3-4 products for development, and 2 more products. That 3 we have completely developed and started commercial supplies in January, and is given 2 more products. So when they see the speed at which Mold-Tek is able to develop molds, develop corrections, and give them a product which they have to go for stability tests, send it for trial, supply trials, transit trials, where they have a lot of time wasted. So if we save the development time by a couple of months, that is what makes pharma to look at Mold-Tek with interest. So, and we are using world-class facilities. Nowhere we are compromising on quality or cleanliness. In fact, if you guys come and visit our plant, you will think it is a pharma company. That's the kind of facility we have created. So, world-class facilities, world-class tool room, and fast development and innovation is what we are bringing to the table in pharma packaging. I'm really excited that that is going to be the game changer for next, at least for a decade for Mold-Tek. Okay. That's my individual expectation.
Okay. Fair enough. So on the pricing side, do we still on the premium side for pharma segment as well compared to other peers?
See, wherever we develop a new product, we can command a very good pricing because obviously the risks of tooling and assembly machines, what we invest, definitely need for call for a higher return, and always all players are ready to pay it. For product which are already established, obviously there will be some pricing or productivity gains you have to show to attract. So both the deals we have taken care. One on the innovative product side, we are able to gain good numbers and good pricing. And on the conventional products, we have gone up with higher cavitation molds. See, somebody is having a 8 cavity or 12 cavity mold. We have started 24 or 36 cavitation. So obviously our per crore investment per day production will be much better. It will not go in same proportion. So we have gone up with high cavitation, high speed assembly machines to beat pricing if necessary in the conventional products. So in both sides, I think we have an edge.
Okay, fair enough. One last part. So given we want to grow this much in next 3 to 5 years, do we have enough bandwidth or we need to improve that? And second, what would be the ROIC on the pharma side of the segment?
ROC, what we generally monitor is definitely much better in pharma. In terms of EBITDA, I can say if it is 38 or 37 in current product mix, anything above 100 to 150 is possible in pharma. So that every kg of pharma would be adding decent numbers to our overall average. So in terms of ROC also, it should be more than 28-29% if our product range goes into reasonable utilization. For example, in the products like canisters, the return or EBITDA is much higher. It's even crosses 50%. So, but their sales are picking up, are yet to see big numbers. And those volumes are yet to pick up. Now, one US client we are supplying 1 million pieces a month, and a few more clients in India have given clearance for trial lots. For them to become commercial lots and become a regular product, it may take 3 to 4 months. So going forward, if that canister sales increase, our numbers will shoot up. But I can't see where it will be right now, because unlike paint and lube industry, we are very new in pharma. So how the numbers will shape up, only time can tell. I also mentioned this 6 months ago, but today I can say with confidence, because what we have seen in January is a testimony of our confidence. And going forward, if a couple of such things happen and 4 more new products we are introducing, molds are almost ready. Some of the samples are under testing. And these products become commercial, let's say by April, May. From June onwards, we can see another spike in pharma numbers. So like this, every addition of a new commercial product will be adding numbers in pharma. And we are taking the challenge of new product development as an entry point into big pharma companies. And they're definitely delighted to see the speed at which Mold-Tek is able to develop a new product or alter an existing product to suit to their lines. This is where we pitch in. For example, I tell you, somebody want a regular 40 ml bottle, which is kind of a commodity nowadays. A 40 ml bottle with 12 grams is what is there at the mold makers all across India. Somebody want a 14 gram because the client insists on some MVT or test or something where he want a more thickness. And while the other other suppliers take 2-3 months to get that core rods changed and cavities changed, we do it within 2 weeks. So they cut time and they will be able to give samples faster than the other company where they are competing with, and they will be able to gain advantage with their end client. So that is where they see value with Mold-Tek. That's happening with a couple of clients. That itself given us a confidence that if it happens with 10 clients, if not all, it can really shoot up our demand.
Okay, thank you so much, sir. That's it from my side. Wish you all the best.
Thank you.
Thank you.
The next question is from the line of Mehul Panjwani from 40 Cents. Please go ahead.
Hello, sir. Thank you so much for the detailed answering of all the questions. Am I audible, sir? Yeah.
Yeah, yeah.
Yeah, one question, because I'm new, I'm tracking this company very lately. So I just want to understand a couple of things. What is the difference in IML and the normal other for paint industry? Why does a paint manufacturer go for IML? I'm very layman in this question. So if you can elaborate a bit.
Yeah, it's a very basic question, but I think, as you said, you are late in following up with this industry. You don't have the full knowledge. Typically, the decoration of a pail is done by screen printing all these years. Then the next step was heat transfer label. That means you print a artwork on a label, and by heat you transfer the ink onto the container. That is HTL. That is a step forward. But in 2010-11, Mold-Tek is the first company to bring in-mold labeling concept to India, along with robotics and even in-house manufacturing of IML we started soon after. So because for every container you need a label, it is impossible to import these labels. So we have developed the technology to even print and die cut the labels in India in 2011-12. And that has introduced the concept of world-class IML decoration in this country. So in this, you can print photographic finish. You can take a picture and develop it in multicolor printing and print it on a label and die cut it exactly to the developed surface of the product. And then you, with robotics, you put the label before the molding, and molding happens underneath the label, and it fuses. The label fuses to the container. Thereby, when the product is molded itself, it is completely decorated and ready to go. So no human contact, no post-operation, no contamination. That makes IML world-class over any other way of decoration. And it covers the entire area of the container, unlike HTL, where you have to leave at least 20% of the area for the squeezing, heating area. So you will end up covering the surface only 80%, whereas in IML you get 100% or 95%, 98% surface coverage. And it is permanent, whereas HDL, by some acidic or alkaline contact, the paint may go off because it is obviously a transfer from a label to container. Whereas in IML, you are printing it beneath the label, and the label is stuck onto the container. So somebody need to remove the label means he has to really scratch it vigorously, even then it won't come out. So it is a permanent decoration compared to other modes. I think I given a detailed.
Yeah. Thank you so much, sir. A follow-up question on this, and then one more question. So first, I'll go with another question, sir. What is it? I mean, again, this may be a layman question again. Why have we? I mean, throughout the call, we are talking about that we are entering pharma, and we have entered last year. I think maybe 3-4 quarters back, we have entered the pharma space, and we are progressing very well. So that's a very good sign. But I have a question which is again basic, that why have we not entered pharma now? Because Mold-Tek has been there for maybe more than a few decades. So why is it suddenly we are entering pharma right now? And is there any particular reason or opportunity?
No reason. It was basically we are growing in IML, and there was a lot of things on hand, including ABG projects were given to us, and it's like more of bird on hand. So it was concentration was all the time on these products and IML products. I wish that time goes back and we can start pharma 5 years ago, but that's not being the possibility. Whatever we could do, we did it last year. Actually, it took us 1 year to set up the plant, and it went commercial about 10-11 months ago. So anyway, never, it's always better late to be than never. So having started, we are now finding that our strengths of mold making, concept designing, product development has a long way to go in pharma than any other segment. And the beauty in pharma is the stickability is very high. Once they are with you in terms of new product especially, their dependence on you is still high as your dependence on them. And the stickiness gives you comfortable growth wherever you could prove your metal. So that gives us a more challenging and better margin space also. Obviously, we are more excited in that field.
Right. Sir, thank you so much for your candid reply. Now, regarding pharma, the opportunity size may be 3-4 times what is there in paints? Is it fair to assume that or even more?
3-4 times of what?
More than paints, the opportunity size.
No, as of today, paint segment, in my opinion, is much bigger than pharma, because most of the Indian pharmaceutical products are still in what you call that metal film packing and what is it called? That aluminum foil packing. So whereas abroad in US and Europe is the containers are used for tablet packing, powders, tablets, even liquids are in kind of HDP and PET bottles. So in India it is a long way to go. But once the Indian pharma, now the rules are changing. Government is, you might have read recently in Baddi they stopped some 25 units which are not following pharma standards while manufacturing medicines. So government is also tightening belts on the way pharma products are being produced in India. If the changes come in, there will be more and more demand for pharma containers compared to what it was a few years ago. But comparatively in terms of rupee size, still in my opinion paint packaging is at least 50% or 100% more than pharma.
Okay, so right now paint is 50%. So can we say that if everything goes well and we are grabbing a lot of opportunities in pharma space, can we say that in 5 years we would be 20% of our sales would come from pharma?
In 5 years, yes, it is possible. Definitely possible, because it's a big packaging segment, more than 4,000-5,000 crores. So what we are talking about is even after 5 years, we are, let's say, close to 1,500-1,700 crores. Reaching a 20% means about 250-300 crores, maybe 300 crores turnover in 5-6 years is definitely possible.
And what kind of competition is there in the pharma segment, sir, for Mold-Tek?
CG Polymers, Gary Scheimer, Gopal Das. There are 3-4 well-established players in pharma sector. CG, I think, is the largest. And Pravesha was there, but it is Aurobindo in-house company, which has been acquired recently by FI, I think PAG or one of the FIs has acquired Pravesha's packaging business. And even Manjushri was acquired by them. So that way, there are 2 big players I can consider is Gary Scheimer, that's a German company having plants in India, and Sriji, which also has 3-4 plants across India. These 2 are major players. Gopal Das and Dr. Pack, to some extent Berry Caps, some products. These 3 companies are also reasonable size, say 100 to 200 crore, I think, I'm guessing, 200 crores turnover.
Okay, thank you so much, sir, and wish you very best. And I am really appreciate the way you are responding to all the questions in a very detailed manner. So thank you so much.
Thank you. Thanks for your interest.
Thank you. The next question is from the line of Akhil Parekh from BNK Securities. Please go ahead.
Yeah, thanks for the opportunity. And sir, many congratulations on the pharma side of the business. But my question is on the paint side. You mentioned that we have almost lost 10% from Asian Paints. So just wanted to understand thought process of the management, given that Asian Paints is the largest paints company of India. Does it make sense to sacrifice a bit on pricing and continue to get higher volume share from Asian Paints? Or it will certainly help in fixed cost absorption, right, if we are able to get higher volumes from Asian Paints. And given that we are already scaling up in pharma, so whatever negative impact it can have will probably get offset by the pharma segment. So that's my first question.
Yeah, it's a business call we have to take based upon our long experience in this field. I'm sure you will give us that credit. So we also don't wish to lose volumes, but the pricing delta is also something which will hurt us in case we follow the rat race. But sometimes we too do that to gain volumes. It's a balancing act, believers, that we are taking.
Okay. So just a supplementary question to it. Like I've been reading, Manjushri is getting aggressive in the paint business, right? And they are the largest rigid packaging player. And we have not seen, I believe, such kind of a volume drop from Asian Paints in our last two to 2.5 decades of dealing with Asian Paints. Would you be able to share some light? Is it because of likes of Manjushri who are competing hard on pricing front?
I don't want to comment about them because I don't have their details with me, how they are competing. But that's not the reason that we are losing our business. Manjushri is definitely not a big player in pails. They are very big in pet and blow molding, as far as my knowledge goes. In pail, yes, of course, they made a couple of acquisitions, or one acquisition for sure, I know. And they are supplying to ABG also from one of the plants. So they are trying to, enter in the pail segment for sure. I know that. They're also aggressive in pricing for whatever reasons they deem fit. But that is not the reason why. Only reason why we are losing. It's a combination of our pricing and Asian Paints expectation and other pricing. That dynamics is what creating this loss of business, which we are trying to impress upon Asian Paints because of our quality, because of our consistent new design development. For example, when they want to reduce their weights and go for cost saving, it will be Mold-Tek first. We will develop the molds and prove the concept, and then others follow. So we take always the lead. Even today, we work with Asian Paints very closely for their new IML products, which they're advertising now in the cricket matches. You see Ultima, Protect, and all. We are the lone suppliers as of today. So that way, our relation with Asian Paints is pretty strong. It is, balanced between their competitiveness, what they anticipate, and pricing, what we expect. Some plus or minus happens, but as a business relation, we enjoy really a good relation with Asian Paints.
Sure, sir. Sure. Thanks a lot. And just one last bookkeeping question. We have 1,500 tons of pharma capacity, right, at this point of the time, and it should be able to 1,500 tons, and that should be able to, at optimum utilization, we should be able to clock 30 crore of top line from that capacity. Is that correct?
No. The minimum pricing of our average on combination of all products, our pricing will not be less than 300 to 350 rupees per kg.
Okay, got it. That's all from my side, and best luck for coming quarters.
Thank you.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah, I take this opportunity to thank MK and Mr. Nitin in particular for arranging this conference call, and I also thank all the participants for their interest and time they spent in our company's knowing about our company and our quarterly results. And I thank you also for your good wishes, and I wish you all a very happy year ahead and good luck. Bye-bye.
Thank you, members of the management. On behalf of MK Global Financial Services, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.